All right, everybody, let's get to it on Thursday. Excellent. How's everybody doing today? Get right into it. Want to start out with Bitcoin, quickly go over crypto, and then jump into the major markets. Quick shout out to everybody in the chat. Been connecting with actually many of you in recent weeks, and I appreciate the emails, the questions, the charts. Keep it up. Let's just post the quick disclaimer. This is not financial advice. This is entertainment. I hope you find educational. Beyond that, if you have any questions about what we do, connect with me at harmonictrader.com. Not going to do any promotion today. I want to talk all charts. Let's get right to the Bitcoin scenario. Absolutely. We came back for the retest of a few patterns. We've been back-to-back patterns, and I mentioned the fact that where we would be by this time would tell us a lot about what's going to happen going forward. And I said, connect some dots, let's put it together, and we see another bat pattern. That was around 44,700, 44,800 area, depending on your data feed. And we're seeing a brief reaction. What's going on, James? What's going on, Jonathan? Everyone else in the chat. How's everybody doing on a Thursday? Today's March 3rd. We're here Monday, Tuesday, and Thursday around 11:30 or so. Today was 11:45. It's been busy. When I log on and start the session really depends on how my morning's going, and I've had to switch it to that. I think it's been great. It's better to do this than doing, I think, the private sessions, but together as we get further into this year, we're doing more. The one quick update about the software. This has been our major focus the last 2 weeks. I do anticipate we'll have the Combo One Pass. That is a second update in the last month. And what that will do is put all of the patterns onto one indicator for your TradingView platform. Right now, the way it's set up is you have to have a small, regular, and large. Those are 3 modules of pattern scanning that we use, or we were using, based on the old version of PineScript. So now I think we've got it down to 1. I've been testing it, looking good, and that's going to make it a lot easier. I think if you're now you can run that pattern scan without having to subscribe to the basic membership for TradingView. There you go. Really quick for Bitcoin, I still say get the basic membership on TradingView. It's only $14.95 a month, and you can load up to 6 indicators. Where we left it off on Tuesday was simply identifying the 4-hour complex formation on amplified RSI, and we've been saying pause, consolidation at that 886. So we're still there, and the software did not generate a pattern match on the 4-hour, at least. I think we saw something on the hourly. Yeah, there you go. On the hourly, the software for Bitcoin at about 45,075 is the 1618. It reversed almost exactly. This is also this whole pattern starting, it's pulling from that previous high. The software is automatically generating it. Why? Because the 886 matches with the 1618. So 45,000 with a couple other measurements, 224, and then your A, B, C, D Minimum equivalent is about 44,000 off of that low. Wouldn't be surprised to see the pause bring you to 40, back to 41, and then we really see what's going to happen. Both amplified on the hourly and HSI are already oversold. 4 hour time frame, this is probably the time frame you want to watch. 4 hour time frame is going into the oversold now, deeper, uh, almost hitting zero, and that's going to take probably 2 or 3 more bars to get out of the zone. So we're again 41,000, 41,200 in this short-term consolidation. Probably not a bad target. Hey James, James is saying you had 5 successful shorts today using Harmonic Pattern Collection scanner. Very nice. Off the new scanner. That's great. I'll open that up in a second. We'll open up the scanner window in a second here. And oh man, XRP really is something else. We'll get in that in a second. So let's give Bitcoin another 24 hours. Whatever it's doing off of this recent peak, definitely running into resistance at that swing 886, but not too concerned. And I said that yesterday, that we would just look for consolidation pause before another run to the higher level. Jonathan's asking, do you usually wait for the harmonic to be formed, or do you trade the C to D leg? The C to D leg, the BAM breakout trade, that's outlined in Harmonic Trading Volume 2. A lot of folks are really doing good stuff with that strategy. We focus more on pattern completions, but we do utilize that framework, and that's what I wanted to talk about today, is the framework within larger assessments for profit targets, even stop loss, or recognizing back-to-back scenarios. Things where we have multiple patterns back-to-back that give us unique situations. Here's XRP, folks, on the going back to the weekly time frame. Remember, massive Gartley here. One second, let me go back to the daily. There's a weekly Gartley, but the daily is 2 of 2 again. And I think this thing is going to try to find a floor at 62 with the big XA level at 70. And you're back down there. I think every time that comes back down there, that's another opportunity. Eventually, they're going to have to rule on this case. The reaction part of this retest pattern is over. That's actually the nice thing about understanding this whole dynamic. We talked about why 70 was so critical. In recent sessions on XRP, this is one that we know is going to take some time, but formed a great Gartley, came back, retested with confirmation. That's typical type 2. Now, nice move up, but we ran into a bearish HSI. Treat that as another reaction and look for another opportunity. Every time that thing gets to 70 cents, 70.88 cents to be exact, it's bouncing. So keep an eye on that. Hey, Paris Fisher, how are you? What's going on? Thanks for coming by. Again, folks, we're here roughly around 11:30 or so. Come in, stop in, 12 noon Eastern till about 1. Monday, Tuesday, and Thursday. I think that might change later in the year. I'm thinking about a couple different adjustments, let's say. But for now, let's just keep going with the charts. Um, Really quick, let's go to the total crypto market cap and see how that has progressed since Tuesday, because it seems like a lot more was happening than we're seeing in the total crypto market cap. This is coming off of depending on your data feed, okay, some Bitcoin patterns, for example, have this as a type 2. Right now, this is still reaction territory. Why? Because we did not get up to target 1. There's the terminal bar where it officially completes. Consolidate for 7, 8 bars, grind up, but just a reaction on the total crypto market cap. Target 1 for that whole this whole level for the reaction is at 2.09 trillion, and we need to see this continue. I said that on Tuesday, where if this is going to be really strong, we would already be well on our way to 2 trillion rolling over. Again, by Monday, if that's not at 2 trillion or 2.09 trillion, I'll have concerns for the rest of next week and going into the end of the month. Same thing with the major markets, folks. We haven't gotten into silver or gold yet. I will. I'll take a look at the metals and crude oil. Actually, I need to take a look at something. What are we doing here? We'll go back over commodities. We covered commodities on Tuesday. Take a look at that session. Here's the total DeFi market cap on the daily. Take a look at what happened or is happening today. And this will register, be official by the close. We have another bearish. That red candle is HSI. Take a look. It relates to this bottom indicator. That's Harmonic Strength Index. And HSI loves to go from extreme to extreme. That's how we treat it. Even look at the last 4 tests. Once the indicator registers, whether it's a reaction or a reversal, that larger move really will, the reaction will show itself with HSI going from extreme to extreme. If you don't get the sizable move in doing so, it's not a reversal. It's not going to be anything more than a reaction. This is the problem with total DeFi. If this was going to blast, we would be higher. And I don't want to see this thing pause here with now about to confirm HSI on the daily. And that's at 135 billion. Top end is 140 billion. Not to mention, just look at the broader measures. Amplified, that red line, that stopped 2-3 days ago. And now we're coming out of the zone on amplified RSI on the daily. That confirms the HSI. There's just really not a heck of a lot to fight other than saying that that's going to take more time, probably go through some consolidation, further consolidation in the best of cases. Where will the money come from? No more free money. Yeah, probably. Look, there's the one thing that's really obvious, sticks out, is that this current environment is almost the antithesis to 1 year ago. It is absolutely amazing how that can change. I've seen it before. Oh, here we go. I said take advantage of last year. And we were talking about how good the opportunity was last year. This year, it's the antithesis. And now we got to deal with it. Whereas all of the trend changes that are taking shape and the larger breakouts have to be respected, not only for the immediate kind of substantial extreme scenario, but what the longer term levels are telling you. We saw that last week in all the ag commodities. Crypto, now we know it's consolidating. We know it's going through digestion phase after the decline for sure, at a minimum. Total DeFi crypto market cap has definitely held its head better than the other crypto indices. Take a look. But going back to back here, and when we see a bearish HSI candle, arrow, just expect that to take more time. We could come back down, retest support again as we build. Just have to respect where we are. This last thrust from a week ago, call it that whole little boost from, I guess, inflows from Russia or whatever, or even kind of like a geopolitical safe haven move. If you had some money flow back into crypto for the last week, the indicators, the measures, the readings are just saying brief reaction, look for more consolidation. Did the blue line cross for RSI AMP? The question is, do we have a completed RSI BAM? Bearish on the daily, we do. So really quick, take a look. On the 4-hour time frame, there's your first test on amplified. Red line goes on. Is secondary test just below those prior levels where RSI BAM. It's a simple bearish confirmation. Why? Because your first peak is here. Your first peak is right here, and then your second peak confirms. At that point, you start thinking, okay, is the larger trend going to continue? Are these successive amplified readings? Is that giving us some kind of larger trend at stake? Look, the last 3 extreme readings, a peak at the high, come back down, secondary peak, lower, tertiary, third peak, lower again. Got to look at those readings. It's confirmation. Successive lower highs, bearish confirmation. And then we know that we have a green line that turned on. Look, this complex structure, W formation, on that from that the lows in mid-January, formed a W. Now we go through consolidation. Well, green line is on. Have to come back. At some point, we have to come back and resolve that amplified RSI situation before some kind of support can be confirmed on a longer term trend here and now. So that's the way to look at it. DeFi, we know, has been stronger than most. So we want to pay attention. I think if this is going to be strong, it's going to lead the pack, and you would then see this thing rushing up to retest all-time highs. But not yet. Here's one that's been a big winner, if not the complete leader, out of the lows has been Luna. Amazing Gartley. Beautiful Gartley. We talked about why $50 was, it was, the big numbers were around 62 or as low as 65. But we did have this Gartley take shape. There were some things on a 4-hour, but then when this daily Gartley, beautiful 618 at the B point, took shape, Look at some sessions back in early mid-February, because I know I was talking about this where minimum target one. Okay, at 50 bucks, we're thinking target one at 68. But when it gets to 68, it blows through. Still on an uptrend, but this might need a pause. Keep an eye on that one. Even if Luna is super strong, what could take shape? Something like this. Come up. That's make that an 886 of some kind of eventual deep crab that has a 382 pullback, and then you go. 1618 minimum, I think. If Luna's going to break out, that's what Luna will do. Someone's asking about the B point breakout. Well, absolutely, we would want to see. You wouldn't want to be short Luna above that B point breakout once that happens. That's one way to take advantage of those kind of, I call them harmonic breakouts. When you have a clear W formation, you get a C point that lines up minimum 382. This could even come down a bit lower, but for Luna, and I would be, having this up on, if you're not looking at Luna, I think it's probably one of the big cap leaders of crypto that if you want to see it run, you want Luna to go. Above 105 if you really want to be safe. You can wait for that breakout and then just shoot the gap up to that 1618. One or two more. Of course, we need to look at Ethereum. I've kind of been dissing Ethereum lately, not giving it so much attention. I think that's personal because I thought I was going to, a year ago, I thought Ethereum was going to basically take me to straight into retirement. And when everyone was talking about Ethereum going to 20,000, it was about a year ago where I had loaded up. Now I don't. I have a little Ethereum. But a year ago, amazing. And just didn't do the massive move. Now we came off of that 4,000 level. I don't think Ethereum is anything other than a failed breakout to 5,000, but I think even really 4,000 for Ethereum, folks, could be a while until we get up there. Forget 5,000. It just seems like Ethereum over the long haul really could have just this cap at 4,000. That would be it. Hasn't done anything. We have a Gartley. This is daily, but nothing. Nothing. And this is a good example where we look at the pattern, let the software generate the completion point. Right there is the terminal bar. And we get confirmation about 3 bars later. That's on a daily chart. And you would expect this, your XA level is 31.25. Typically, we would look for that to go from 31.25 to target 1, 37.13. But look what happens. You come out of the zone. You are now 8-10 bars. You can't follow through, and you generate a bearish red triangle HSI. Looks like this. And I do this a lot where I track the reaction coming out of the zone. That's a 5-minute or 1-minute trade. We'll look at some NQ in a few moments here. But great technique to see how a failed reaction out of a zone has to be capped off. And just use HSI. If it rolls over like that, you get a candle, you get a red arrow, you pull it out. So it's a common thing. It is one of the things that has to be done if you're going to be doing some harmonic pattern trading, and realize the reactions that aren't going to give you those convincing follow-throughs need to be managed accordingly, and look for another shot. Now, we use harmonic strength index primarily with amplified RSI in the zone. Why? The patterns give us the level. That's the framework. So if right here is the completion point, I'm supposed to start to look for the opportunity to the right of that pattern. What I need to look for is some kind of technical event, like a reversal of an oversold indicator or confirmation point of a support zone, and then gauge that relative to the pattern and the profit target. If I'm looking at that and I'm looking to the right of that pattern, then I just look at the indicators and say, if that's here on the indicator chart, tell me where the reversal in the indicator happens. It's more like there, or it's more like here several bars later after the pattern's completed, but then no follow through. And again, this is something to look for when you are starting to put it together. Okay, I think a lot of people are hyper focused on the level alone, but then tell me about the character of, say, what amplified RSI is doing in that zone. Because we know what a complex structure can do, RSI BAM can do, but the simple ability to get out of the zone and break above the 50 level is critical. But if you don't follow through and you roll back into the zone, again, these are signs that it's going to take more time. And you look for another trigger. And that's why Ethereum is not doing much. It does not have any massive clear-cut trigger. You have a nice complex structure on amplified that just came out of the oversold zone at the end of January. And we've consolidated down here for over a month. And again, your last reaction shot had no follow through with another bearish HSI. Right back down. Okay, another bullish HSI, but these are all duds. That's important. It's really critical to read that. And that's my concern on Ethereum, that if this fails these lows, again, making no progress in recent days or the last week, that will be conversely like Luna. If Luna's the leader, Ethereum is kind of the lead loser. Just not doing much off of that zone and can't get out of, can't even violate this downtrend. That's still in effect. Too much on the chart. Let me clean up the chart. Keep an eye on all of those. I think there's just a lot of opportunities that will have to be retested. Bitcoin, okay, it's having a brief reaction. Beyond that, if you can't get above 45, whatever, it's not going to do much. You're going to come back and have to spend more time down there. Will we ever get HT free HSI for TradingView? Yes, you will. Again, one of the things that in what we've been doing with the HTF, the Scott bot, the HPC bot, we had to upgrade the script, and that's what we've done in the last month. Again, we've put the new combo script. Sorry, check this out. This will be coming out later in the week. We've combined all of the patterns into one combo, and this upgrades us to Pine Script 5. So this will be, go there, and it'll be, you guys will get this. But now that we have done that, I can upgrade the bot script to match the patterns, and HSI and everything else is the same. But that was a major update that I didn't anticipate. one or two more. Yeah, okay. You want to look at AVAX? I wanted to look at. Let me show the other one. Avalanche. Avalanche is nice because it has a clear Gartley with the ABCD structure off the top, but another one that does not. It's not a blowout move. There's the completion of the Gartley. Beautiful A to B, C to D move, and you blast up to target one at 88 and change, 88.95. Now you're in the type 2 return move. You're going to have to come back, return, retest XA. The larger move off the top, this this ABCD. And let me put the labels on. Let me hit these labels. There you go. All of that speaks of reaction, folks, and that's not beyond this first move from early February. You're going to have to come back down and retest again that initial XA Gartley point where you've got secondary test of support. And we'll see. I'm not like if we see that, we're seeing that in a lot of these setups. There's at best a type 1 reaction. Okay, and maybe type 1 reaction up to target 2. Like Luna. That's probably been the best of the bunch. Another one that was real good, need to keep an eye on it, but is KNC. This thing has absolutely exploded, but you're up here at a hop level on the daily of a bat. It doesn't look like too threatening in terms of the fact that that could go higher. Where is there's the weekly chart. Let me change my layouts here. Sorry, folks. Let me go back. There you go. Actually, here's one that I wanted to show. LRC. Okay, this is another one. Was a high flyer. I'll go back to KNC in a second. They're similar cryptos, but doing opposite things. LRC hitting this 886 now, and all of that's around 75 cents. Okay, starting to come out of the zone, but that's different than KNC. From a chart basis, KNC much further along in terms of basing since last summer and holding recent lows. I mean, I've been saying, look for these situations where long-term downtrend is violated, stabilization, and then you set up some kind of retracement pattern, target some longer-term static resistance. The beauty with KNC is that you now have this BAM breakout. XAB. B at a 46, that takes you up to an 886 move eventually at above $4. So that's talk about the breakout strategy we've been alluding to. Why? Because it's within the framework. Again, here's another framework move. We know if we can connect dots, XABC sets it up, breaks out of the 4 points, which is an important distinction. A lot of people will try to guess and say, hey, maybe there's a C point here or somewhere to try to buy it to anticipate, oh, it's going to automatically be an eventual bat. That's really not what we can do. You have to wait for the BAM breakout. And this is there now. I mean, look, above that 260 area, you should see the acceleration over the next several weeks. It'll take time, but that's a perfect example of it. CRO, okay, crypto.com. Yeah, crypto.com around 42 cents. Doesn't this have, I think this has something on a, there it is, a bat pattern. I knew I was looking at something with this back to back even. Butterfly versus the bat pattern. And let me change the color inputs here. There you go. $44.90 on crypto.com. That's your target one. This is another example of beautiful pattern, but still needs to do the return. This is pretty close to satisfying your type 2, however. Look, there's the target 1 objective. If we're looking at the zone, there's where the pattern officially completes there, but decides to spend 30, 20 bars consolidating, hits hop level. But there's your confirmation on that first test didn't come in until 37 cents. Then zoink up to target 1 right there, gets rejected. HSI, now we're in return phase. $39.99. That will be the official type 2 structural level. Comes down. That could happen pretty quickly. That could happen tonight or tomorrow. And then you would be in business for larger potential. Target 2 at 48.55. Does that come at 39 cents or 35 cents? That's what I'll look for. And if I pull up the indicators, tell me what's happening when we get to that point. Well, we do have a few interesting developments on amplified, almost there, oversold, and your green line will stop on the next oversold reading. That's a good potential sign early, but it would have to do something like that. And harmonic strength index is already oversold, so take a look at how this navigates over the next 24, 48 hours. Ideally, you'd want this thing to drop 2 cents, 2.5 cents, hit it pretty quickly, and then pivot and go. 39 to 48. But you're at that point where there's enough stabilization, your first reaction, that's satisfied. Where the larger opportunity is down in here. Look for it down in here. I like that one. I do like crypto.com. I really, for if you look at Binance or look at potentially what these brokers can do, it's crypto.com. They're not going out of business. And so if you want to speculate, and again, I do think speculation is the word, this is not a bad one to be looking at. It's already lost 60% of its all-time value. Major haircut since ran to $1. And depending on what, here's Coinbase. It did an 886 Coinbase reset where it jumped onto Coinbase straight up all the way back down 886 for, is it 36 cents? So I think it's pretty clear. Longer term, 886 all-time reset number for Coinbase data feed is around 36. That would be the low end. If as soon as that gets under 40, I'm looking. How do we get the trading view update? Okay, really quick for everyone that is an owner, subscriber, or if you are a trial user, want to be a trial user, I will show you where to get more information. Go to harmonictrader.com, become a basic member, log in, and access the information on the basic members page. Now, to get the new update on your TradingView platform, what you need to do is sign out first. Really important. Go all the way down here, sign out, and then sign back in. I did go through this on Monday. So watch the beginning in detail Monday session, but then you just load the indicators back, invite only, and you'll see the combo or alt combo, or one pass is what we're calling it. The one pass is everything into one. The full update's probably going to go in over the weekend, and we'll be done with that, and then I can go to the bot. The bot's ready, and the patterns. The whole point behind the pattern upgrade, folks, was to get us in line with the recent Pine Script update and get more patterns. And we're able to do that because we have more, we're able to crunch more with the modules we have. It's the other reason why we had to separate them into, before it was like 6 modules. Now I think this one module will do it. I think that's one. The other one I wanted to look at again is Cardano. And I don't want to look at this for anything other than the potential failure possibility. We know that Cardano, just let me bring up this, fix that here. Okay, good. That was the other one. So Cardano under 98 cents or 96 cents was a disaster, still is. But we have this daily, take a look, this big bat pattern. This one's even bigger. It's grabbing off of, with the new combo one pass, I'm grabbing off of the last February low before the major run. Maybe that was the breakout run. And these are still pointing with some numbers. Again, 96 cents is huge on the downside for support. I'm not crazy about this new pattern anyway, because I really feel that the 120 area, this level on Cardano, the last pivot from last summer, that 886 should have held. I also mentioned this recent price behavior, this big reaction up and then that throwdown again, really in line with the larger downtrend. And until this is a situation where the bullish pattern cannot fight the major trend, until the trend, we have to break out of the trend. There's your downtrend on Cardano. Look for this. Just keep your eye on it. If it continues to fail, that will give you a sign of what the rest of the market could potentially do. I think this is one of the weaker ones, could not even react. All right, Squirrely, you guys that are persistent, I admire persistent people. So here's your SIB coin. I have no idea what this is. Someone wants a total S coin. What are we going to do with that? Now, I could say this is, of course, told you so. I appreciate this. Someone's Squirrely Crypto was saying, has been hitting the chat on this SIB coin. So I don't know what the SIB coin is, but can I just say, hey, look at this beautiful pattern? Of course, the pattern told you so. Of course that was going to happen. No, I don't think so. That's a great one. There's nothing I can offer you on that other than if you're in that long. Take a look. This is beautiful. Oof. Hey, thanks for bringing this one up. I would have never brought it up, but let's just trace it out. Someone has been asking for this SIB coin to look at it because it's up 3,000% in a couple of days. From what? 1 cent to 30 cents, 45 cents. Okay, that's beautiful. Yeah, total S coin, SIB coin. Well, I don't listen. If you're in that, and you're not out by now, you need to get out. I don't care what it does. I don't care where it goes from here. If you're in a 10x move inside of a week, thousand, or 30x or 40x high to low, reminds me of Doge. You have to just jump, like, get your parachute and go and say thank you for just letting me to be this lucky to capture it up in here, even at 29 cents. Now, I could say this, and just say, oh yeah, of course the patterns picked it up. You do have back-to-back patterns here. It's a beautiful scenario. I don't know, unless you knew something about the project. Again, I think it's here's an example where an understanding of the harmonic pattern framework would at least put you in the position to possibly capture this move. Take a look at the Gartley. And this is also an example of patterns that I think, from a software perspective, for everybody that's been using the software, especially crypto folks, you know what I'm talking about. When we get these beautiful back-to-back patterns and we have the understanding of type 1, type 2 framework, these are possible. Now look at the Gartley. That's where it completed for the first time at 2 cents, 2.40, 2.4 cents, 2.16 cents, and we would look for a move to 4.8, 4.85, which it did precisely. In the process of doing the reaction, look, let's break it down. You did have back-to-back. So what happened on the first move? You didn't get all the way to that 4.8 cents. You came off the low of the XA move. Nice reaction to 4 cents. No follow through. And then you come down in a crazy little terminal bar retest move, perfect shark. That's kind of a bad wick, tough wick, but look. It still did the 1-2 and came up for reaction even off of that shark. And then even for looks like a lot, it looks like a lot of zigzag. It looks like a lot of garbage. How do you know something like that? It's not an easy one to really pick out, but if you see this thing being reactive without following through, rolling over, doing a 382 or 3-bar rollover or something, you're continually taking shots. Here's the ultimate retest of the hop at 1.3 cents, and it broke of the downtrend line. There's a lot of takeaways from this crazy S coin, SIB coin. At least we recognize the fact that even from the larger Gartley, which you did have, connect the dots, which the software does. You had the first reaction up, second reaction down, and it exploded off of that. How do you read something like that from now? Well, you have to go, let's get all of the data. Look, there's your all-time data. Well, look at that one. All right, look at that. I mean, that's crazy data. Somehow that was maybe an ICO rug pull. Oh, you got to be kidding me. Look at what the software generated on the weekly. Wow. Take a look at the weekly. Let me remove all of the drawings here. And the weekly time frame had a massive, look at this massive Gartley. Okay. Hey, I appreciate you bringing this up. I think this is absolutely example of the things we want to look for in any coin, any crypto, what have you. I mean, that's amazing. But that reminds me of XRP. So appreciate that one, but here's XRP. Again, I showed that earlier. I'm still, where's the XRP? There you go. So this is the weekly XRP, it's Qcoin data feed. And that's a pattern, a weekly pattern. I will go to this pattern all year long until we get the breakout. But these are the kind of patterns we want to be looking for. Identify where the terminal bar, the pink, depending on what color you have it, but it's that sun icon. Okay, it's difficult because the pattern will draw the low, the structural pattern, to the last extreme low. So that's the last extreme low, even though the pattern completed here. The takeaway is that you do know this is a reaction. There's your first move. Came up, all the way back down. Okay, there's the return back into the zone. We're stabilizing 53 cents, 58.7 cents is there. Pete saying, look at the daily. Oh yeah, Pete, nice one. Thank you, Pete. Pete says, pop up the daily. And that the daily has another Gartley. 57 cents is the number. This is just a matter of time. It's not price, it's time. I think that's something where you break out of the downtrend, you're going to have a lot of fuel behind this to proceed the move. Amazing. That's really, again, these are the big patterns I want to be lining up now. And if we get the next move, the next crypto move probably will come individually. I don't know if it's going to be a mass move. I think it's going to be more of like individual, one by one takeoff. Last one. Here's Ren. Okay, this is another one. I own this. Okay, several patterns here back to back. I think I mentioned this on Monday. Big bat pattern. And the first move off of that from last summer did go all the way exactly to target 2. Now we know we have a secondary pattern, retesting that pattern, where let's see how this plays out. But this isn't a massive reactive type 1. You have a couple of patterns here, but 67, easy, 67.7 cents, minimum target for Ren. I definitely think that these are the kind of situations where you get back-to-back patterns, you get clear stabilization, you look for the larger potential move. I like that one. I mean, Ren's setting up quite nice. Not to mention you're taking out. Let's just break down to the zone. Ren is a nice example where first reaction, you got confirmation, green arrow right there is HSI, but you ran into a bearish HSI reading. All right, not crazy, but just likely you're going to need more time. And when you see that scenario, folks, you have a bullish pattern down here and you run into a bearish HSI, typically whatever the XA level is, you look for that. You look for either that or the next HSI arrow. So if you're up here, HSI triggers somewhere around 36 cents, don't be surprised to see that thing come back to 29. In this case, went back to the terminal bar at 25.7. And then we trigger another bullish HSI. And that's on the daily Binance feed. Plenty of time with that daily. When you see that and you have a daily candle like that, it's just plenty of time to react. You're still in the larger zone. You know, your larger zone is 25 to 29. Kind of wide. It seems like if that was a penny stock, I would say 25 to 29 cents is fairly large. But in this instance, no, we're looking, once we hit that level, look for the reaction, stabilization, and then go. And Ren, again, taking out the prior peak at 41.50, 42 cents. That triggers it for the larger move. These are in a much better condition than, say, or relative position than, say, Cardano. Something like, crypto.com, looking like it's going to come back. That hasn't broken out. Doesn't look the same, or Cardano doesn't look the same as something like a Ren or Luna. So let's jump into major markets. Look, Nasdaq been struggling to get above the 14.5 level, 14.4 level. Where are we on the 5-minute chart? Let's see here. What are we up? We're off 56 for the day. We ran into, check out what this did this morning. This was actually beautiful. Ran right into hop level at 14,350, 349.46, and then triggered HSI. These are Nasdaq futures. This is the one thing, the other thing I've been working on is to identify type 1, type 2, which I hope to have once we finish this PineScript 5 thing. I want to bring in a module that will highlight what, basically where you need to look so that people understand from here essentially to there. That's your type 1 range. And that's it. I mean, beyond that, once you get to target 1, it's all gravy. And really what we're looking for between target 1 and target 2, according to the framework, is your first HSI reading in that level. So this denotes the whole area for the type 1. And why is that still a type 1? You would think, oh, well, just did a quick move down there. Isn't that it? No. It has to hit the target 1, target 2 area. We have to get to at least 14,137. Even though we went sideways for a while, really sloppy, and then all the way up here, still valid. That's why sometimes the type 1 trades where they're at the hop level, a deep crab, not a surprise, can offer a nice reaction. Might be sloppy, but I've seen this over and over again, and I would still look for the maximum here. This target 1 is from a structural level. It's like your serial target. I can't explain it. It's I've seen it a lot where you get the pattern completion right there. It might screw around, it might chop around, but if you're here at the D point, you have to hit target 1. It's just something that when you train your eye to look for the framework in that perspective, you will begin to have the correct anticipation to know that, hey, I'm not even going to look for an opportunity on the long side until we satisfy that reaction move. That's the type 1 action. That's the type 1 framework, where if you can clarify that, understand how the reactions have to come off the patterns, then you know where the larger move can go. If this 5-minute pattern can get back to, say, we're done. The reaction is done for this morning. And at that point, HSI has triggered at around 14,080. And I would be looking for the move to come back, retest that 1618 at 14,254. That's 125 from current levels. Absolutely. I think I'll be able to highlight that stuff and create an automated tool. I know I've got the rules pretty much down. If I can get it from a time perspective, and I keep saying time is the key for all of the measurements. But you can understand how that has to do the reaction first. Then we're not looking for long positions in that zone, which is where we are. I mean, currently for today, done with that in the morning. Are we going to stabilize here? What's the 1 minute time frame? All right, we have a crab pattern on the 1 minute chart. And I am looking for a long opportunity, at least some kind of recovery bounce. Let's look at some other markets. We'll come back to that. S&P 500. I want to go to the daily. Here's the shark pattern. We did a type 2. All the way back down to 4110. We talked about that on Monday. Now, this is the most important level, I think, for all the indices. Nasdaq, S&P, Dow. We need to see where does S&P 500 close by tomorrow afternoon. I mean, 43.97 is the HSI checkback signal. What does that mean? Essentially, for what is our bread and butter trigger signal for all patterns, is showing us we have another bearish temporary trigger inside of a bullish zone. And it's reacting. It's kind of getting rejected this morning. So, as we've seen in a few of the other charts, expect that to take more time. We come back down a little bit, retest the zone. We'll see. I said before in the I forget what the last example we were looking at. I think it was that crypto chart. When you get that, look for minimum retest of whatever your primary, the lowest range number in the zone. So that's about the 886 level minimum. Maybe retest that, or until we get another HSI trigger. Bring this back up. Here's the add-on studies. This means it can take more time. Just within the whole framework of the pattern, we're not surprised to see this take, I don't know, more than 30 days of consolidation. Here's the HSI indicator. It just topped out, again, 2 days ago. Checking back today. Does this break down? Will HSI continue lower? We know it's a serial indicator. It likes to go from extreme to extreme. Extreme to extreme. That's how we treat it. And in doing so, Need to see that trigger probably again back in the zone. I mentioned this on Tuesday as well. Here, look at the amplified RSI downtrend. We had a green line that stopped. Okay, that means we had divergence, successful divergence, where the secondary reading of amplified was higher than the prior. And you had a nice W formation there. Okay, ideal confirmation, what you want to see on a secondary test. But we know that type 2 reversals take more time. So if you don't blast off, and that's, if there's really one trait for how to ride a rocket ship, if we know that it's got to be the secondary test of the pattern and we position ourselves in the right location, well, what it should be is pretty much a straight off move to target 2. And it should do so in a serial, aggressive, day over day, bar over bar fashion. This is building, but you are 7 bars since the low, 7 days. And have you had a major thrust continuation? Not really. You're actually hitting some resistance and you're not able to bust through. This would have to bust through today. I mean, this would have to be, I would want to see a close above this check back level, above 4,400, to confirm this larger reversal. This has to go literally by tomorrow. Keep an eye on it. We roll over, then we're going to have to deal with some things going into month's end. I think tomorrow is probably the most important Friday close of the quarter. And where it closes is going to just dictate, I think, the month, the entire month. Couple of comments. Couple of gut-wrenching stories. I hear you. Oh, you were trading with leverage. So someone's putting in some comments of a blown out account and over leveraged. I don't trade leverage with crypto, folks. So take that for what it's worth. If you do trade with leverage, make sure you're able to lose that money if it's an exchange thing or a glitch or whatever. The other thing about trading on those kind of accounts is that when you get profits, you literally withdraw them from the exchange. Mark Douglas used to say that's called paying yourself. Mark Douglas would say, and Paula, Paula T. Webb, Mark's partner, it's an important part of day trading like that. You need to be making money, and as much as you need to be making money, you need to be withdrawing money because you're taking profits out, you're securing them elsewhere. There's a few people that are trading successfully on leverage, some guys that are posting great charts, whatever. I think their stop loss management is the key for those kind of charts and that kind of trading. Because if you don't have an automatic stop loss on those kind of accounts and you get blown out, it can be a widow maker, as they say. So let's keep an eye on S&P 500 above all, because of the resistance we've run into, because of the things that are preceding this, where this should be turning up. Plenty of time here, but this has to go now. You don't want to see a 3-bar reversal. You don't want to see any kind of single bearish bar. Let's keep an eye on that one. Really quick, let's look at the Dow Diamonds. Similar situation to the SPY. And Dow Diamonds are, from the daily, weekly time frame, they're not that far off the all-time high. At the same time, this sluggish action up here since the COVID low, non-confirmation, no continuation, is the only thing you really want to concern yourself with. And that's basically not even threatening a 382 off the low. It looks like this. Okay. Oh, you're at a 236. 382 is at 297. Basically 29,700 on the index. But keep an eye on the diamonds. Again, it's surprising they haven't fallen more, but I think you're seeing crude oil and some of those other stocks holding it up. We'll look at that in a minute. Really quick, someone's asking me a question about the amplified RSI. You want to know about this dotted line? Okay, that maybe a lot of people don't see that line. That's kind of a subtle line. One of the problems with marking up the chart is you just get overkill of, especially with the patterns, because the patterns can, you have so much crap on the chart you can't even see the price action. I'm well aware of that. With the indicators, it's the same deal. So we have to kind of highlight some of this. Someone's asking, what does that dotted line mean? It's a great question. It is the point where the complex structure, the W formation, if it's bullish, M formation if it's bearish, okay, defines the indicator low. Meaning, what's the extreme, what's the last complex reading, and what's the extreme level. So that'll help gauge like how far the indicator reading can potentially go into the zone. And here on the bearish side, take a look at this. Take a look here. Let me blow up the indicator. All right. Here's a dotted line that went on. This is daily diamonds. Okay. It goes on and then stops there. Why? Well, your last reading, okay, prior reading of that extreme, your complex reading is right here. Let me highlight that. In the bearish instance, okay, that's an M formation, folks, M. That's the bearish complex reading. That's an extremely significant level and formation. That's something that I talk about in Harmonic Trading Volume 2, and I suggest everyone read Volume 2. Why is it important? Because it marks the beginning of the RSI consolidation phase, meaning you typically see that come out, come down to the 50, and then get retested. But if you understand that this is just a reaction, okay, and this is Bitcoin currently, then we know how to treat it with other patterns. Then, as that, so here's where the line stops. It stops because you get a successful retest right there. Sorry, right here. And comes out of the zone. That's how to read it. Will the line be dotted if the reading was impulsive? Absolutely not. This is the complex return line, folks. It does have a name. It's the complex return line. And so if you see that line, actually, here's a great way to think about it. You see this dotted line on the chart? Okay, until that dotted line stops, you need to see some kind of retest. All right, if we're looking at the complex structure and we understand that this is just only the beginning, where typically it goes down and has to come back up to retest. That's the mechanism at hand. Well, if we know that, well, then we still know that the price action has to go up again to resolve whatever reading occurred here. So that means higher prices until we resolve it. So if you're in that zone like that, you understand where that line goes on. against this reading, yeah, we anticipate the retest. Do we automatically buy? No, but it tells you still trending until that RSI is retested. Absolutely critical. Look at volume 2, folks. Go to, again, let's go over here, harmonictrader.com. Sign up as a basic member, and then I'm going to show you volume 2 really quick. This is the framework. There's a couple frameworks within harmonic patterns. There's the pattern framework, connect the dots, get the measurements right. There's the management framework, reaction reversal. We know that that has to, most patterns have 2 opportunities, maybe 3. First one's a reaction, second a reversal. And then the confirmation framework, where we get an initial test, okay, an initial reading, followed by a retracement, followed by a secondary test, and then we look for patterns in between those two points, kind of like this. Really clear stuff of having that. Let me blow this up, you can see it clearly. That's the ultimate model, and we're looking for, here's the thing, is you're looking for this kind of framework, multiple RSI tests or amplified RSI tests with the price action. It sets up an ideal harmonic divergent opportunity. And the ideal scenario, you don't have to have it, but when you get it, sure, absolutely. It's one of the strongest conditions you can have, because you have both the harmonic level, harmonic structure at work with the multiple points of RSI BAM divergence happening. And here's classic. This is the kind of thing you want to look for. Okay? Putting it all together in the greatest of sequences, you get some kind of pattern between the complex formation and the secondary test. And the D point, that's where your strongest opportunity would be. And that's how ideally you want to be thinking in this framework of exactly to put all these elements together. It's not always going to happen, but even if you have parts of the framework, for example, if you have a complex structure and you recognize that, you know any retracement is just a brief consolidation reaction. So get on all that, get on volume 2. Again, learn about the importance of confirmation there. We'll be looking at more of that next week with crypto for sure, because most of the crypto are coming into their own for major secondary retests with confirmation. Some already completed, like XRP. James says chapter 6 in the volume 2 book is the most important. I would agree. That's the towards the back. Go here and go towards the back. Go to the RSI BAM chapter, folks. That's what you want to read, because that takes you outside of just M and W's. You know, we want to look for putting together both the pattern framework, okay, and the indicator framework. So chapter 6, that's page 171. A lot of stuff that I personally was able to put together there. I have gone through basically all the indicators out there, and I think, you know, Wells Wilder, who created relative strength, by far that's the best primary indicator that works well with patterns. Let's go over to Nasdaq. Where are we now? 5-minute chart. Okay, we popped off of that low. Check it out. 4080, we popped off of that low. That was a 1-minute crab pattern, and check it out. It's probably a type 2 right now. Oh yeah, check this. All right, not bad. That's pretty nice. For a sloppy 1-minute pattern, we're still in a better spot, where I think NQ trying to make a run to 239. This is Nasdaq futures for today, folks. And that's how we would read that. That's a type 1 move. We're trying to flash. Okay, you see that gray formation? That's a pending potential pattern trying to generate something. Not quite there yet, but that's a nice one. If you're looking for opportunities for this afternoon, I think we could get a little bounce recovery. We're only down, what now? 40, 37. Don't be surprised to see this again. This 254 number, 14254, probably needs to get retested one more time. That just fits within the framework, even though, yes, it does exceed the 30 bar constraint that we want to. Typically don't want reactions to go more than 30 bars, but you had a hop retest, you had HSI at the hop. Okay, sloppy but works. If you miss it, you still understand that that is a type 1 reaction and that we could be very well on the return phase, which, yeah, now we're starting to jump. Look, we're up 20 now off of that low. Could you explain the time frame for 113, 1618 complex structures? Time frame, right? Ronald? Time frame, I guess, is what you're referring to. Uh, Looking at what time frame? How do we look if it goes to a 113 or 1618? Well, you really kind of want to line it up relative to the indicator itself. Let's look at this amplified reading on the 5-minute Nasdaq really quick. Okay. Again, where the green line stops, right there, that's a successful RSI BAM. Now, you have to do the reading. It's going to be a confirmation if it's higher or divergence if it's lower, meaning there's your complex reading right there. It's kind of tight, but it qualifies. There's a W formation, and there's the pivot point right there. It goes up, comes back down. Let me blow this up. Now, where the green line stops, you start looking. So there's no action until that green line stops. And where are you relative to that prior low? You're slightly below it. So that's divergence in the making. Okay, and you take what? You spend like 20 minutes down here before you popped out and really started to go. Okay, that's divergence. From a time frame perspective, I think that's what you're asking of time frames is on a 5-minute basis, and I think for everybody trading futures, the 5-minute should be a larger, kind of longer term time frame, but certainly a great one to follow, especially HSI, where I would then break that down and look at, say, a 233 tick, or look at, say, a 15-second or 30-second chart, whatever that is. Usually it's 8 to 10 times. I think you like to look at the primary time frame, and then like to look a fraction of that, like an eighth of that. Here's a 30-second chart in that area. Break it down. There it is. Okay, so you did have a little pattern, couple of patterns back there on the 30-second chart, where that's a way to break down the 5-minute trigger of the divergence. There it is. Okay, and then tell me what's happening on the retest in this area. If it's a 5-minute time frame, folks, again, as your primary, let's just use this as a primary intraday time frame. And it's something I talk about, the time frame, comparative time frames. I talk about that in volume 3. Maybe we can get into that more on Monday. But the simple way to do it is whatever you have your pattern or your signal on, say it's 5-minute, we want to look on a smaller, quicker time frame. And that should usually be like 1/10, 1/8, meaning if it's a 5-minute time frame, okay, your smaller time frame that you should focus in on should be like 30 seconds. That's, like 1/6, or maybe 20 seconds or 15 seconds. But something that's a fraction, a 1/10 fraction of that. If it's a daily time frame, I would look at, say, a 60-minute chart. Hope that helps. But we still want to take action off of the primary trigger in that zone. When the green line stops right there, okay, tell me where that is. That's about 13,983. But then break it down to, say, a 20-second time frame, 1/10 of the move. You go back there. This is going to take a little while to load. You go back there, all the way back. Where was that? I can't go all the way back there, because that was a while ago. Let's look at right now, where it is. 5-minute right now, comparative. All right, we're coming off of this. Yeah, we're now 190, folks. Again, I was calling for 254 30 points ago. But here you're at the type 1 level. You do have RSI BAM on the 5-minute, and tell me what happened there. Look, this happened this morning. There it is. Green line stops. Where's the secondary test? It's at an 886 of that prior low. That means it's a confirmation. And we had a HSI test here, and we know we have to retest that butterfly. That's the way to look at that. Now heading up back to, I think, XA level. That looks like a nice one. But the way to break that down on a 5-minute, show me your 20-second, 30-second time frame. What is down there as that's triggering, which was here. Yeah, and again, look, beautiful crab pattern in that area where it triggered. That's how to look at this. This is on its way now, folks, to, I think we'll get above 14,200. And actually, it's been fairly uneventful relative to the 200-300 point days we've seen for the last month. Keep an eye on that. I think we should talk more about that, because it's an important consideration, bringing all of the first test, confirmation, and then reading it. Are we doing gold sessions? Yes, we are. More on that on the gold members page, folks. If you need to become a gold member, reach out to me. One or two more. I did want to update crude oil. Let's look at USO, because that has been remarkable. And I think it's, if that thing's running, and it has been, it's, really almost parabolic at this point. I want to start lining up possible short-term targets. Where can this go in the craziest of scenarios? There's USO on the weekly, folks. Amazing. Deep crab right at the COVID low. But now look at the acceleration off of that deep crab. We are in our zone. This golden zone, target 1 to target 2. Okay, but we don't have HSI. The first HSI test, or at least close to it, came shy. So this is still type 1 reaction on the weekly. Not saying that I would worry about this thing coming back to 21 or 31 at any time soon, but we are in this area where I'm looking for the first HSI signal. And that looks like this. Come on. The thing about the remarkable move, and you can see it obviously on the weekly chart, straight up expansion. Now, really important where this happens, because that kind of a breakout move in the overbought extreme is not bearish. It's extremely bullish. And I would not think about USO until we hit target 2 at a minimum. Not to mention, HSI is turned back up into the zone, you're going to need, oh, I don't know, at least 3-4 weeks till you come out of there. And let's really be alert of this unique condition. It's much like the trigger that happened back here, which relates to here. Okay, USO, when it's first thrust out of the zone back last January, it exhibited some super strong indicator readings that told you something larger was developing. And then finally, it would have been amazing had that done a full retest of amplified. If that had done that, that would have been a perfect trend continuation where USO, due to the nature of this ETF, could really blast off. I think target 2 at 86.74, real likely and soon on this run, probably by the end of the month. The last pattern that we see to the left is a bearish bat pattern, has some levels at 92, 93 bucks. That's going to set us up where that's the only pattern range we want to consider. And if we're just thinking about this relative to pure price action, again, look at what is possible. There's nothing on this vehicle above that 130 level. This is also one of those Boyle type super aggressive ETFs that only move when the front month of the contract moves. So you need to have insane action, which you do, and you have to have it relative to prior history, breaking out, doing crazy things. This one above 86.74 or even above the prior levels, against this bat pattern at 108, all of that would still be a reaction and happen pretty quickly. I would just, be mindful. We've come a long way. Take a look at, really quick, CVX. This is Chevron. I mentioned this wasn't more than 2 weeks ago. We were looking at this Gartley. It was failing, just blasting through. Now, what are you going to do with this? We do have this kind of pending crab pattern, but we talked about why that was so critical, why that was so strong, this failure. Not to mention, look at the preceding pattern. You're coming off of a prior shark. And this is another type 2. Type 1 up to target 2, all the way back down, perfect. And now we exploding through. Until I see a pattern, 173 possibly, or I even said this on all of them. Treat this next breakout move across the board as a 1618. 1618 is it. That's how strong these are. We don't need to overthink it. That's usually the natural harmonic breakout move. Once you get going, we look for a 1618 when it's so demonstrative like this. That's what's going on. Go to the monthly, there's a lot of force behind this is the way to think about it. Check out the monthly. All right, even the monthly has a massive type 2 crab at 156. And I'm keeping my eye on this because I do think that's a major development. And why should we ignore the patterns when they've been just banging left and right? Until we get HSI to trigger, this will go higher. And it's just a question of, does HSI trigger at the hop at 156? Or does it do something like go to 190, 200? A couple other things that are up there. I think you're going to see it pretty quickly, but look at what the monthly indicator reading is doing here. All-time new highs on amplified and HSI exploding in the overboughts. And until these roll over, and that's months away. I mean, look at this. Last time you were this at that peak was all the way back 2004, and that was a massive breakout. I mean, once you broke out and went running ish, it wasn't a 1618. You know, your 1618 would be like that. That was a 314. All of the major integrated oils are doing this. I think Chevron's probably tops, and we're going to see a major shift. Here's another one, folks, that I think you're just going to have to start getting some. LNG. Okay, LNG. There's no way that this company is not in the crosshairs of the potential solution. And we had the massive breakout. Now I'm going to keep my eye on this. If we can get some kind of a pullback because we can't follow through, but it's going to be like this. It'll be maybe a drop down quick and then go. This is not going to stop. This LNG trend reminds me of Costco, 15 years ago. It's just, I think that's one place to look. Here's the other one, the largest domestic energy producer, which is Continental Resources. I was on this over a year ago. You go to the monthly chart. Is it monthly or weekly? I think the weekly. Coming off big bat patterns. There you go. I think, yeah. Oh, this was, I know what this is. This is, the patterns here are for CLR, hop levels 65 to 67, which we will get on this move. And we were also bottoming. We had a bunch of things around 18 bucks. That's the larger play. But if it breaks out, I think this is a candidate to break out once it gets above this downtrend line. Like that. Now, listen, that's a 786. There's another 786 of the 786. We need to see that bust through. If it busts through, you go to the all-time 886 is around 75, 80 bucks, but you're at the point with a lot of these, you haven't seen it in 10 years. A major breakout like that. Still a lot of time. Here's another one. Again, folks, you have to get into the energy sector. Just when everyone was saying it was dead, here's another one. Apache on the monthly. Major butterfly. This one absolutely is broken out now. And I'm going to gun for target 1. This is playing catch up, and I don't think that's going to stop. You should look for this monthly, month over month, continuing to break out the new highs, 66.42. Should really get this going. And look at the, you broke out the downtrend about this time last year and has been nothing but up with, ways to go. I mean, these are just starting. More on that, I think, for Monday. I think we really kind of knocked a lot out. Please bring your other questions back on Monday, folks. We'll take a look further on that at that time. I will be having some updates over the weekend for gold members and software members. Do join us over at Harmonic Trader. Please check out that and get over on the Discord. I think we should have that Discord up where the alerts are on for the sessions. But join us there. We're posting charts. A bunch of people are there. 240. Good. Small group, but a great group. Great charts. And like a lot of... I saw some... Who was it? Was it Sekar? Yeah, here you go. Some great charts that he was posting, I think. There you go. This is the one I saw. I think we'll look at this one on Monday. Colgate-Palmolive, Johnson & Johnson, Procter & Gamble, Clorox, A lot of these look like this. We'll come back on Monday. We'll look at those long-term ones. Those are more defensive stock, dividend plays, but a bunch of them have come all the way back, like this Colgate Palmolive. These are going to be slow as anything, but they're in a perfect position for a long-term swing trade across the board. So we'll look at that on Monday. The Apache symbol is APA. Apache. It's this on the monthly. I brought that up before. This is going to be slow. It's up $2 today. Wait for a little bit of a pullback, but again, against that monthly pattern, we want to be playing longs. That's what I have for today, folks. Again, a long session. Thanks for your time. Appreciate everyone coming out. We'll be back on Monday. If you want to get with the software, go to harmonictrader.com. That's the place to go. If you have any questions, reach out to me on the Discord. I'm right here on the Discord. So send me a note on Discord. And if you send me an email, I'll get back to you. Please give me 24 hours. Beyond that, come on back on Monday, folks. We'll get more into crypto and energy. Let's see how things go this weekend. But, I think we got a ways to go with crude oil. We'll look at commodities too more next week because they're just continuing to blow up. I like energy. I like natural gas. I still am favoring all of these. I still think the larger markets need more time. But let's see how we close on Friday. We'll come back Monday. We'll see where we are. Thanks again. Have a great one. Have a great weekend. As always, go get them. I'll see you Monday around 11:30.